Welcome back to our monthly real estate market update from Pries Capital Real Estate. I'm Jason Pries, founder of Pries Capital Investment Research, and as always, we're here to break down the data and give you the real story behind the numbers in the Myrtle Beach housing market. Let's dive in. This week, available inventory of unsold homes dipped by just 4 units, a very minor weekly decline. But don't let that single week change distract from the bigger picture. On a 3-month basis, inventory continues to grow. Now, remember, it was about 3 years ago that mortgage rates began to spike as we exited the pandemic economy, and ever since then, we've seen how rising rates typically drive inventory higher. This spring, mortgage rates have stayed elevated longer than most anticipated, and as a result, unsold home inventory continues to expand. There is some good news though. Mortgage rates ticked down slightly this week and they're now lower than they were this time last year. That means the typical mortgage payment today is about 3% cheaper than a year ago, which likely helps explain why home sales are still slightly outpacing last year's numbers. Now, let's talk about pending home sales, because that's one of the key leading indicators we track at Pries Capital Investment Research. Weekly pending home sales counts have been coming in below last year, but they haven't notably dropped off yet, even amid the market volatility triggered by the tariff situation. As of now, it looks like April home sales will come in a little weaker than April 2024, but again, the momentum could shift quickly. Easter timing skews the week's data. This week's numbers are a bit tricky to interpret because they include the Easter holiday weekend, and that always slows down both new listings and new pending sales. Keep in mind, last year, Easter was in late March, so the year-over-year comparisons will be slightly skewed. But here's what's coming. We're entering May, and that's historically the time when we see seasonal peaks in home sales and prices. So the next couple of weeks will be especially important to watch. Global volatility is adding uncertainty. With today being Sunday, May 4th, we're already seeing movement in the wrong direction. Mortgage markets are up, and stock markets are down. So we'll need to watch carefully to see how this volatility in the financial markets impacts buyers' sentiment and mortgage rate trends. Don't worry too much about this week's dip in activity. Holiday weeks always see a slowdown. What matters most is the magnitude of that change, and whether we start to see a shift in consumer behavior moving forward. Let's kick things off with the latest pending home sales data. This week, we counted 648 pending contracts for single-family homes in the Myrtle Beach area. That's essentially flat from the previous week and just slightly below where we were at this time last year. Now, over the past month and a half, I've been pointing out that pending sales have consistently come in below 2024's levels. And it's worth remembering that mortgage rates peaked in Q2 last year, which dragged home sales way below normal during that stretch. So here's the base case for this spring and summer. In May, June, and July, we should start to see year-over-year growth in home sales, mainly because there's more inventory now and it's slightly cheaper to buy than it was last year. But this year's potential buyers are juggling more than just mortgage rates. Job security, income pressure, and rising expenses are creeping into the picture. These are bearish influences, but so far they're only lightly affecting housing decisions. And while the tariff headlines have rattled the markets recently, it's still too early to know how much they'll impact housing. The economic aftershocks just haven't hit the real estate sector yet. To be clear, unemployment is still low, American homeowners remain in a strong financial position, and many corporations started 2025 from a position of strength. So it's entirely possible that even if a recession develops, housing could remain one of the most resilient sectors in the economy. Now back to the data. In this chart, you'll see the black line for 2025 has been running below the gold line of 2024 since the start of the year. And because this week's report includes Easter weekend, we'll likely break the short streak of weekly growth we'd been seeing. That's normal during holiday weeks. But look ahead to May. Last May's sales were extremely restricted, due to those high rates at the time. So unless there's another major market disruption, I'm expecting that we'll start to see May 2025 outperform May 2024 in the coming weeks. Right now, there are about 9.5% fewer homes in contract than this time last year. So when we see the April home sales headlines next month, expect them to reflect a dip compared to April 2024. While sales remain slightly elevated this spring, the supply of unsold homes continues to build, and that's a big part of the story. Why are sales still holding up? Because buyers have more to choose from. Inventory growth means more opportunities for people who've been waiting on the sidelines. Just this past weekend, a friend of mine mentioned that a home in his dream neighborhood finally hit the market. He wasn't actively house hunting, but suddenly there it was. He jumped in and found himself competing with 3 other buyers. In several parts of Myrtle Beach, homes are becoming available for the first time in years. And with prices slightly lower than before, that's motivating a new wave of buyer activity. Greater supply creates greater potential for sales, but only up to a point. Let's look at the numbers. 992 single-family homes are currently unsold on the market. 1,838 condos are also sitting on the market. That's a 40.7% increase in single-family inventory year over year, the biggest jump in 3 years. Take a look at this chart. Each line represents a different year. Inventory almost always climbs in May, with a couple of exceptions like the 2020 pandemic year and a soft spring in 2023. I've highlighted 2019 here in light gray, because that's our most useful pre-pandemic benchmark. Remember, 2019 followed the 2018 rate hike cycle and was also a tariff-driven slowdown year, very relevant to today's climate. In May 2019, we had 1,225 unsold single-family homes on the market. Right now, we're at 992 homes, so we're getting closer to those old normal levels. Our current forecast suggests that by the end of this year, we'll actually surpass 2019 levels for available inventory, and that's something we'll be tracking closely in the weeks to come. Key takeaway: more inventory means more sales opportunities, but it also means less upward pressure on home prices, and both of those trends are exactly what we're seeing play out in the Myrtle Beach market right now. As inventory continues to grow, one of the natural outcomes is less upward pressure on home prices. Right now, we've got 40.7% more homes on the market than this time last year, and 9.5% fewer home sales happening. That combination gives buyers more choices and forces sellers to price more competitively. This week, the median price of pending home sales came in at $434,540. That's up slightly from last week, but still just a fraction below last year's number, down about 1.2% year over year. So what does this tell us? It's pretty clear that we're not likely to see median sale prices break above $445,000 this spring, based on how things are trending. The bigger question is what happens in the fall. Remember last year, mortgage rates fell in September, and that gave home sales a surprise boost, both in activity and pricing. The 2024 line in this chart, marked in gold, spiked late in the year. Right now, this year's line, shown in black, is just below last year's, but we're at a key decision point. Looking ahead, this year's price trend will likely depend on two things. Mortgage rates, will they fall again in the back half of the year? The broader macroeconomic picture, including things like employment and consumer confidence. And right now, both of those variables are still playing out in real time. So while we don't yet have clear visibility on how this will unfold, we'll be tracking it every week to give you the most accurate read on the market. Let's continue with the ongoing price trends, starting with one of our favorite leading indicators, the percentage of homes on the market with a price cut. This week, that number ticked up to 46.5%. That's high, no question about it, but it's also not accelerating quickly, which is an important distinction. For about a month now, the rate of price reductions has been hovering on a plateau. Sellers are still cutting prices, but the pace isn't ramping up dramatically week after week. So what's behind that? Well, we believe it's because enough homes are still going under contract, especially in Myrtle Beach, that sellers don't yet feel pressured to slash their asking prices aggressively. You can see this trend in the black line on the chart, which has been moving sideways for several weeks now. Now, let's compare that to last year. The gold line for 2024 shows a much sharper shift. Why? Because last April, economic reports started coming in hotter than expected, interest rates spiked, and mortgage rates surged to 7.1% in late April. That caused buyers to pull back, sellers didn't get offers, and suddenly, price cuts started climbing fast. You can actually see that inflection point in the chart, a clear sign that buyers lost confidence, and sellers responded by dropping prices to re-attract demand. Then look at the green line from 2022. I've highlighted it on the far right of the chart. In September of that year, when mortgage rates hit 7.12%, price reductions spiked immediately. It was one of the fastest adjustments in seller behavior we've seen in recent years. So what's the takeaway right now? Price conditions in Myrtle Beach are soft, but not worsening. Demand is light, inventory is increasing, but we're not seeing accelerated deterioration in seller sentiment just yet. For now, sellers are holding steady, and price adjustments are occurring at a moderate, controlled pace. We'll continue watching this closely week by week to see if that pattern changes. And that's all the data we have time for today. Thanks for watching, and if you're looking to make sense of this ever-changing real estate market, we're here to help. Call us or visit our prestigious office at Pries Capital in Myrtle Beach, South Carolina, where we'll guide you through everything you need to know about the housing market. You can also visit our website at priescapitalrealestate.com, where you can now sign up for a free Pries Capital Real Estate research account. With this account, you'll gain access to weekly local market data. And again, I can't stress enough that this live data comes out weekly with insights tailored to your area. Whether you're buying, selling, or advising, we'll help you dive into your local market and make informed decisions. Click the link below to get started. Thanks again for tuning in, and we'll see you next time.